Hello everyone, I'm Shen Yuan, the founder of Joint Commonwealth Fund or JCF. So JCF is a crypto index fund aiming at realizing universal basic income. So for this week's JCF Weekly, we like to talk about one important question, which is what's going to happen or what can we do in face of the next financial crisis or financial collapse. So many of you probably know that in 2008, there was a very bad financial collapse in the global financial market, started from the fall of Lehman Brothers, in what's called a subprime mortgage crisis. In that scenario, what happened was a lot of people who may not have enough salary or credit, they actually get loan from banks to buy houses in hope that their investments or their purchase of house will increase in value in the future. But that was actually a bubble in the working, meaning that many people spend money, investments into the housing market and causing the price to continuously to go up, causing a bubble market. But on the other hand, many of them are financing this purchase of houses with really bad credits. A lot of people who may not have the ability to pay back the loan are still getting credits or financing from banks. So at some point, this will fall, right? Because once the people are unable to pay up their loan, the banks will have bad debt. And the worst, and what happens was even worse, was these debts were actually chucked into pieces and sold overseas to the international market. So that caused a lot of these investment instruments or vehicles to they're actually very poor in nature, but were branded as value investments by the global investment community. So that caused the 2008 financial crisis. Now, that time, what happened was the US government backed up by printing out a lot of money to, save the banks from collapsing, basically get them loan so that they can support themselves throughout that period of time in order to avoid, continuous collapse of various financial institutes. However, the ability of governments to do such thing may be limited. And in many ways, the inherent financial structures of lending, of borrowing, of financial leverage, that kind of thing still exists. It hasn't really changed since 2008. And for example, like stock markets in the US has been on the rise for 10 years now. So many people, observers, believe that the next financial crisis might be in sight within the next couple of years. It can be maybe next week, next month, or next year, but we don't know. But something will happen, to sort of course correct the stock market price. And potentially some institute might also fall, or even governments. So some kind of correction or financial collapse could be on the horizon, but what can we do? So essentially we can maybe borrow ideas from some of the most wealthy and richest people or family. So a friend of mine shared with me, James Picard. He's actually a lawyer, a financial observer for many years, and he wrote a book called Currency Wars. He also had been an advisor to the US Department of Defense on, making financial warfare simulator, and also to, the Federal Reserve. So he's really a financial expert and long-time observer. In his latest book called Aftermath, that is, after the next financial crisis, what can we do? He notes that from his conversation observations, the wealthy families in the world, some of them have preserved their wealth for hundreds of years. What they do is they invest in just three kinds of main vehicles. One is land, the other is gold, the third is art. So why the three? These are basically assets that almost never change in their fundamental value, because pretty much everything else, all the other financial activities can be said to stem from these, resources. Or in some ways, land can produce, crops, farm stocks, right? It can become factories, it can build buildings on top of that. So land is valuable in that right. It's the physical basis of all things physical. For gold, It's actually a way or vehicle to capture and store the value that people transact. So let's say we want to trade. You want to trade your clothes with my food. In the ancient times, it's, we trade by giving objects, but that becomes cumbersome, and it may not be as easy. So gold becomes the trusted medium on which value can be stored onto it. Of course, gold is cumbersome, it's heavy, it's difficult to verify, expensive to store, to transfer. So we later have other financial tools like fiat currencies issued by the governments that are solving this problem. But gold has a unique point in that it's not controlled by the government, at least its quantity. So governments cannot increase the supply of gold to increase wealth or to pay people salaries at ease or at will. They can do so with their own money, with the government issue fiat currencies, but they cannot do so with gold. So gold has that objectivity built in. And as for art is really another kind of value capture in whether painting or sculpture, is that it captures the essence of humanity's creativity expression. And it's kind of a hallmark or sort of a symbol for our spiritual creations. So it's got spiritual values in the arts that any human being can consider and can appreciate. So that is how the wealthy families preserve their wealth over centuries. Now the question comes back to then how can we do, as ordinary people or as people who may not have as much money to invest in either land, usually if you purchase land, it's a lengthy process and you probably need a good sum of money, right? Or to purchase like gold or, in art. Even if you purchase gold, there's still the issue of how can you store all that gold, right? You probably don't have a warehouse or a security to do so. So you can probably only invest through some funds or through some other agents, which will charge a certain amount of management security fees for your investment. So in that sense, you still, there's a certain price to be paid for, investment or keeping your assets wealth in gold. And same for art, it's pretty much largely inaccessible to ordinary people unless you have, tens of thousands or millions of, dollars in wealth. Now, is that it? Well, from our perspectives and from our observations, not really, because due to the invention and the appearance of cryptocurrencies based on blockchain, there's now a fourth alternative, which in nature or by nature actually is very identical to gold, land, or art, which is, cryptocurrency, especially the public cryptos such as Bitcoin and Ethereum. Why is that? Well, let's talk about Bitcoin. Bitcoin in particular is actually another form of digital gold because it has many characteristics just resembling gold. For example, its supply is limited. At most, there will only be 21 million Bitcoins out there. There cannot be more, and it will not be controlled or governed by any governments or corporations or individuals. Nobody can change that. So from that aspect, it's very similar to gold, but it has other properties that gold doesn't have. For example, gold is expensive to store, to transfer, to verify, but it's very easy to store and transfer and verify Bitcoin. Okay, so that's a huge advantage of Bitcoin over gold. And also it's more accessible. Anybody can hold a Bitcoin, create a Bitcoin wallet and hold some and buy some Bitcoins on the internet. Right now there's over 20,000 exchanges worldwide with almost any kind of fiat currency you can think of. So you can buy Bitcoins even with your credit card or bank transfers, other means. And you can hold a piece of that. Now, there could potentially be other valuable cryptos like Bitcoin out there. And in fact, the whole crypto and blockchain trend is on the rise long term. We're talking about 5, 10, 20 years. But how can you take part or invest in this big trend? Well, we don't know which coins will succeed or fail, and likely 95 to 99% of them will fail. And we all know this is very volatile market. It's very, risky, so to speak. However, we can again borrow wisdom from other industry, proven mechanisms. So there's one such tool called index fund, which is not investing or picking individual assets to invest or hold, but actually it's investing on the long-term trend of the whole industry. So index fund in stock market actually has proven already that the long-term performance of index funds, the passive investments, beats 90% of the actively managed fund in performance. It has lower fee, it has better performance, and it's much safer. And the reason is very simple, because it invests on trend, not on individual companies or stocks. The same can be said for cryptocurrencies. Well, if you believe that the crypto blockchain is a trend, it's on the rise, it could be a new opportunity for many of us who may not have the capital, the assets to invest in land, gold, or art. But it's time you may be able to invest safely into cryptocurrencies. So Joint Commonwealth Fund, JCF, is in fact such vehicle. We are a crypto index fund, and we may be the first zero-fee crypto index fund out there, in that we will not charge you until you make money, until you have gained and earned wealth from your investments. Then we will take, part of the dividends that's payable to you regularly as to sustain our operation. So we actually invest in the crypto trend to accumulate wealth more or less cheaply and automatically. And on the other hand, we actually put all the profits of the fund into a public pool, a public dividend pool, kind of like a public trust, and where dividends are paid back to all the investor or participants on a regular basis. So this way, the wealth created with the collective fund is actually shared by everyone, because we don't want to just build yet another vehicle to make the wealthy more wealthy, but we want to have a vehicle that can actually not just ride on the trend, but also make society, to provide everyone with a good financial opportunity for the whole community that participate in this effort. So if you're interested to learn more, please go to our official website, jcf.world, to learn more, and feel free to also drop us a note or email if you're interested to inquire more. We will be releasing soon in the market in October, and if you are interested, you can subscribe to our newsletter, like us in our Facebook page, or subscribe for our YouTube channel. All right, so that's it for this week's JCF Weekly. We'll see you next week. Thank you very much.